Welcome to Trading Nation. I'm Brian Sullivan. Pleased to be joined once again by Paul Meeks, Chief Investment Officer of Sloy, Dahl Holst, known primarily as a technology investor extraordinaire. Been a big year for technology, Paul. NASDAQ outperformed, FANG stocks getting all the attention. Will it be the same big-name tech stocks that outperform in 2018, or will the leadership rotate?
I actually think that technology will outperform the S&P 500 next year, though the market will have a bit more of a subdued return as it has had in 2017. And I do think, because I believe in technology, particularly in key industries like public cloud computing, that the strong do get stronger. So yes, the FANGs and some of the other key stocks I actually think will outperform the broader tech sector again next year. Maybe by not as much, but I do believe they're going to outperform again.
Why? Who's left to buy?
I think there's a couple of the names, such as Facebook, that when you see their repetitive quarters of earnings beats, and not just small earnings beats, but major earnings beats, and the PE ratios of both Facebook and Google actually are not egregious at all. There are some stocks that have participated this year in tech that do think that the valuations are egregious, but I think Google and Facebook for two are actually fairly reasonable priced. I don't think that they're too expensive at all.
Kind of an off-the-radar name that you like is, it's easy to get it mixed up with Alibaba. It actually is sort of an Alibaba play. It's Altaba. AABA is the ticker. Why do you like this company?
So I like Alibaba, and I've liked it for a long time. I like this particular stock because it actually looks technically, when you take a look at the price charts, better. And of course, it's a company that has just investments in two pretty important companies, the other one being Yahoo Japan. But this is really a derivative play, first and foremost, on Alibaba. So I own that stock, and I own Alibaba itself.
You ran a giant internet fund in the dot-com boom. What do you think of Bitcoin? Is Bitcoin the next gold or the next Alibaba, or is it the next CMGI and ICGE? And you know what I'm referring to, those names.
Yes, we go back a long way, Brian.
Yes, we do.
I will tell you this. I do believe that the blockchain technology is definitely here to stay. And I do believe, just as we went from back in the colonial days, from jangling gold pieces in our pocket, that e-currency is inevitable. No question in my mind. However, in the very short term, this does look to me, particularly in Bitcoin, like a bubble that's about to burst. So yes, I like it long term. However, some of these plays, either direct or indirect, look very scary, and I'd stay away from them as far as investors go.
Yeah, but a bust wouldn't even be a bad thing necessarily. It would hurt people in the short term, but we saw a lot of companies like Amazon.com, most famously, needed to go through kind of a cleansing of its investors to get back and find its footing. Maybe, and people get burned, not saying it's a good thing, but are busts necessarily always a bad thing, I guess is a better way to ask it.
No, I think that's a excellent observation, because not only that concept, but also you need to figure out who the winners are. And as you go through, you have a number of derivative B and C tier plays that go by the wayside, and then you figure out who is going to be the dominant one, who is going to come out of the crisis and be the Amazon and the Google. So I actually do think it's very healthy.
Paul Meeks of Sloy, Dahl Holst. I got it right. It's a mouthful, Paul, but I got it right. Paul Meeks, appreciate it. Thank you very much for joining us once again on Trading Nation.
Thank you, Brian.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.